Hello, welcome to Knowledge for Finances. And today we're going to discuss, can you get a mortgage with late payments? Very common question. So we're going to answer that today. As a brief review, remember, mortgages are done with FICO 5, which is Equifax, FICO 4, which is TransUnion, FICO 2, which is Experian, 5, 4, 2. So in this example, 665, 686, 659, for the purposes of underwriting a mortgage, your score in this case would be 665. All right. Now, one of the most important things to understand about a mortgage, and as you're going through the mortgage process, is understanding the processes which they use for underwriting. Typically, what you have is two systems. One system is going to be based on manual underwriting, which you want to avoid, and the other system is going to be based on automated underwriting. Now, this system is called the AUS, Automatic Underwriting System. So the question is now, what is it? What exactly is the automated underwriting system? Well, to make it simple and put it in layman's terms, it's a computer software where the lender, most of the times the mortgage broker, sometimes the underwriter, depends on their workflow, will enter all your pertinent details, income, etc., debt to income ratio, where you work, how much house you're trying to buy. All this information will be entered into the system, how much house you qualify, I should say. And what will happen with the computer is doing most of the underwriting. Now, it depends on the lender. Some lenders use 100% automated underwriting. Some lenders will use both. Just depends on their criteria and how they sell their loans or wholesale their loans on the market. Additionally, if the loan is a certain amount, it's always going to be manually underwritten. And what I mean by that is high dollar loans. You're buying a $600,000 house, $750,000, $800,000, $1 million, $1.5 million, $2, $3, $4, $5, $6 million house, for example, that you were trying to finance. That will be 100% manually done. Typically, it's not unusual for jumbo loans. Now, the jumbo loan amount will vary based on where you live. In some cities, the jumbo loan max, I don't have the chart nearby, but it's going to vary. Typically, it's around between $490 and $510, depending on the city. But of course, more expensive cities, say Hawaii, LA, for example, it'll be more up in the upper $700,000, $800,000 range before you get to jumbo. So the automated underwriting system basically makes the loan process easier, quicker, smoother, and allows for a lot easier approvals. Typically, if a loan is manually underwritten, has a greater chance. And manual underwritten loans typically have more denials, just because they cross I's, dot all the T's. Now, the question is, if you have one late payment over the last 12 months, how will this impact your loan approval? Well, it will impact your loan approval depending on the situation and the overall nature of your credit file and what you're trying to do. For example, if you have one late payment over the last 12 months that is just an outlier, and let's say over the last 2 years you hadn't had any late payments, it's just one, you can explain that away. That won't be a big deal, especially if that's your only late payment within the last 2 years. All right. Now, if that late payment is on a mortgage, you probably will want to wait until that last late payment on that mortgage is 13 plus months old. The reason being is that the FICO 5, 4, and 2 is going to be a lot lower because of that hit. All right. So the question is, well, what if the late payment is on something else? Well, if the one late payment is say on a car or a credit card, then you usually can get away with that. Usually, especially if you've been through the home mortgage process, let's say you didn't make it all the way through the underwriting, final approval, or you get your email telling you you're clear to close. Typically what'll happen is you will have a chance to write a letter of explanation about why you missed the payment, if it's more than one payment, which we're about to get into. Now, if you're in a situation where you have multiple late payments over the last 12 months, the extenuating circumstances could help you, but more than likely, especially if the multiple payments are on a mortgage, you're most likely not going to be able to buy a home until those late payments are more behind you. Additionally, some of this is just common sense. Think about it. If you're going to a lender and you're trying to borrow 200, 300, 400, 500, 600,000 and up for a house, and you can't even pay your bills over the last year, of course, you don't look like a very strong borrower, right? So your risk for the loan is higher because you present an opportunity for the lender to lose money. You don't look as strong. Your file is not as strong. So I always recommend to people, excuse me, who are in situations where they do have late payments in the last 12 months is to wait or try to come up with a way to remove the late payments from their credit report through hiring companies like myself, Knowledge for Finances, or trying to write goodwill letters and get the payments removed, late payments removed. Now, like again, if you have multiple late payments though, the extenuating circumstances may or may not help you. In most cases, they won't. They really won't. Especially currently, at the timing and the recording of this video, we're going through the pandemic of COVID-19. So a lot of mortgages now have what they call overlays. So in having overlays, they're going to be even more strenuous for the loans, right? Now, how do you overcome the late payments? Well, we used to have a thing called non-QM, which is non-qualified mortgages. Those mortgages will have a little bit more flexibility in how they go about approvals, ability to let things float. Of course, higher interest rate, more down payment, and then you can refinance out these loans in about a year or two. These are unlikely to be available right now at the time of this recording, the COVID-19 and the pandemic. So you overcome late payments through just waiting till that last payment is 12 months old, or trying to get the late payment removed, or going a non-traditional non-QM loan, which means non-qualified mortgage route. Again, that is unlikely to be the case in this current environment, but if we weren't in a pandemic of COVID-19, you would have that opportunity to pursue loans of this nature. Now, compensating factors are important. When you have compensating factors, that can help improve your situation. For example, if you have had, let's say you had, 2 late payments. So you had one in the last 12 months, but you've had 2 in the last 24 months, which would be 2 years. But let's also say you have a ton of cash. Let's say you have $100,000 in the bank. Let's also say your debt to income ratio is very low, 20%. Let's say your FICO scores, middle score, let's say you're around 715, 710 range. Well, in a scenario like that, and you have a large reserve, which means that you have, let's just say for the sake of example, let's say you had a year reserves, including your cash, your larger asset amount. Well, in a case like this, you can swing an approval through the automatic underwriting system. A lot of you don't know, usually when you apply for a mortgage, sometimes your broker, they'll just throw in a lot of categories and factors into the system. So let's say you got denied, and let's say they start adjusting things. For example, instead of you having the typical requirement, 2 to 3 months of reserves, now they put in 12. Let's say that when you first ran the loan, let's say they stated that you had, say maybe 10K in cash. Well, now let's say you have 100 in cash. Well, now what they're doing is changing the numbers, changing the scenarios, changing the parameters to provide compensating factors to make up for those 2 late payments. This is why I always tell people it is so important to when you're going through the process of buying a home, you want to put your best foot forward. And by putting your best foot forward, that means that you put yourself in the best situation possible to be the strongest loan applicant as possible. That's kind of tough to do if, one, you have low reserves amount, you have low amounts of cash, you have high DTI, your mortgage scores are, on the minimum side, you're just making it in. That's not putting your best foot forward. Now, everybody's situation is going to vary. Now, if you have a minimum score, but you only have like 3 or 4 accounts and everything's paid off, well, that's all you have, right? So, but you can improve your situation with, hey, I got $15,000 in the bank, I got $20,000 in the bank. So you're improving your situation greatly because you have compensating factors to make up for where you're weak. All right. So overall, as we conclude, you want to remember that you want to try to not buy a house, period, with any late payments within the 12 months. That's the best case scenario. If you have any questions, you're interested in talking to me or someone on my staff, please click the link below and schedule an appointment with us. We'll be glad to talk to you. All our consultation is free. We'll be able to help you move through the process of discussing late payments, how late payments affect other areas of your life, and how we can go about getting those payments legally removed using the Fair Credit Reporting Act. Please reach out to us. Thank you for your time, and have a great day.